Good afternoon to everyone and happy Holi. Honorable Minister who has just left, Binay, Dinesh, and distinguished guests from Fintech, financial institution, industry, press and media, ladies and gentlemen. The theme of my today's address, and immediately going to be followed by one fireside chat, what I understand, is Fintech innovation and regulation, a fine balance. The underlying thing is the fine balance. I am honored to be invited to deliver this address and would like to express my sincere appreciation to this invitation to speak on this topic, which is quite relevant in the current scenario. We are gathered here to sense, assess, and celebrate the role of Fintech in developing sustainable Fintech ecosystem and contribute towards a sound financial world. As I often speak, sustainability in any sphere is about balancing the needs of future against the wants of today. I'll underline, balancing the needs of future against the wants of today. Sustainability of financial system in this sense is no different. A wise man said, extremes are easy, strive for the balance. My address will be focused on looking closely at the ingredients of this required balance. The balance that can help the fintech sector in scaling the height consistently and sustainably. To start with, let me first put across the quote as a precursor from the Douglas B. Reeves, an American author. He said, quote, "Sustainable change, after all, depends not upon compliance with external mandates or blind adherence to regulation, but rather upon the pursuit of the greater good." Please hold on to this thought, as this is the essence of what I'm going to share with all of you, this learned audience. As you would appreciate, the current financial system has been built with years of painstaking efforts and has evolved over the years by taking into its fold multitude of innovations along the way. You would also appreciate that while all segments of the economy are important, financial sector is special as it deals with public money and entails high degree of trust. Therefore, this segment, by being special, requires special attention so that vulnerability, if any, are managed in time and managed adequately. Therefore, focus on the innovation in the financial sector and the regulation of it is not new. However, recent strides made by fintechs have certainly renewed this focus, as it is because this fintech revolution is not about new tech improving the processes or customer experiences alone, but also, more importantly, about new trends and new products and services. The fintech-driven innovations, what has created many new products and services, and these are of both the kinds, the one which excites us together, as also as regulators, and the ones that are alerting all of us of the challenges in dealing with them. Few such innovations in financial sector include mobile payment, peer-to-peer lending, private currencies, crowdfunding, robo-advisories, etc., and etc. Many of these products and services have indeed offered greater convenience, efficiency, and accessibility to customers. However, these innovations have come with their own set of risks, a few of which I would like to touch upon. I will touch upon 4 to 5 risks only. There are many, but the 5 important which I consider important. The first important thing is the customer protection. This risk is perhaps the most critical one as far as fintechs are concerned, be it plain fraud or misconduct, imprudent lending, or even lack of appropriate disclosure and transparency. Risk of loss to consumer is often quite high. In fact, our experience in digital lending space has been quite concerning. But beyond this, even the risk of loss to consumer due to tech unreliability or vulnerability of their system, as well as due to business failures, may be quite significant if it goes unchecked. The second risk I'll touch upon, or concerns I'll touch upon, about the data privacy and security. The newer products or services being rolled out by fintechs are primarily built on the use of data. Fintechs tend to leverage on vast troves of sensitive financial as well as personal information as part of their business models, making them exposed to data privacy and security breaches. These breaches can lead to consumers facing more inconvenience to significant financial and social losses. Third part, I will talk about the integrity of the financial sector. This is sacrosanct, as this is well appreciated and understood by all. Fintech entity and products, due to their novelty, reach and correct current regulatory coverage, because at this point of time there is arbitrage between the traditional system and the fintech, may become vulnerable to abuse by criminals and bad actors, which also raise concerns relating to money laundering and terrorist financing. And next, I'll talk about the stability of the financial sector. Our minister has touched about, and questions were asked about the big techs. Fintechs, including the big techs, can disrupt traditional financial system in many ways. The concentration risk, market dominance, competition, predatory pricing, ability to scale rapidly are generally cited as elements of risk associated with big techs. These interconnectedness with traditional financial system and consequent failures may possibly impact the stability of the financial system. Hence, regulators need to keep a watchful eye on the developments that may contribute to build-up of any systemic risk from the fintechs as well as big techs. And last, I'll touch upon the risk of the model, which often brings the question of fair treatment and anti-discrimination in the extension of credit. It is necessary that highly automated fintech business model for decision-making take care of requirement of fairness through additional procedures, controls, and safeguards, both in the development and deployment of model and also in the final decision-making. You must be conscious that these models, whatever are built for decision underwriting in case of lending part, is based on limited data points. It is not covering the entire business cycles. And definitely it creates the limitations in the outcome of the models that can possibly bring the some sort of a limitation by way of creating the unfairness actually in their decisions. Let me now touch upon how we are going about as a regulator in achieving this required fine balance, because our theme is the balance. One of the ways we address it by introducing the regulatory sandbox framework in 2019. Regulatory sandboxes allow fintechs to test their new products and services in a controlled environment with calibrated regulatory requirements as necessary and acceptable to all stakeholders. This allows for fostering innovation while also ensuring that consumers and systems remain protected. Another approach we have taken is to carve out a new set of financial intermediaries under a new regulatory regime. Payment aggregator, account aggregator are few such examples. Other approach has been building a regulatory framework around a new product whereby significant risk has been eliminated through regulatory design. Regulation of peer-to-peer lending is one example, where we have prohibited undertaking of credit risk by the platform themselves. Since 2021, we have taken further more initiative to foster innovation. One of them is creating our own domestic innovation hub that we call Reserve Bank Innovation Hub located at Bangalore. We have also started global hackathon in the Harbinger series. While the RBI has already started to make it mark by taking up a few key projects and initiatives, we have launched the second hackathon that we call Harbinger 2023, after successful completion of the first one, that is Harbinger 2021. It is always a challenge for the regulator to strike a balance between fostering innovation and managing risk. This also needs to be seen in the context of timing of introducing the regulation and the extent to which to regulate. The timing of bringing the regulation and extent to which it to be regulated. It is said that if regulation is introduced too early, innovations do not flourish. And if it is brought in very late, there is the element of risk materializing, leading to many negative consequences. Similarly, if regulations are extremely light touch, it often fails in its objective, and if it is too onerous, the beneficial aspect of innovation do not get harnessed. If you would have carefully noticed, our regulations generally had intention to remain inherently balanced. Through our regulatory and supervisory efforts, we have tried to prevent regulatory arbitrage across different regulatory regimes. We have also attempted to bring regulation only when required and only to the extent it is needed, so as not to stifle the innovations. Having said all this, I firmly believe that true balance between innovation and regulation will not come from now how a regulator approaches regulation. It is desirable that this comes from within the fintech. I'll again repeat, it is desirable that this balance should come from within the fintechs. If fintechs and their innovations are responsible, it will intrinsically reduce the need for regulation. And for fintechs to achieve the same, I believe the need to focus only two things, that is customer centricity and the governance. Let me dwell a little on these two aspects. If a fintech is a customer-centric, its products or services should avoid loss to customer in any form. As indicated earlier, loss can come due to fraud or misconduct, due to insufficient disclosure and transparency, or even due to business failure of fintechs. It can also come due to conflict of interest between customers and fintechs. This is very critical. This is where fintechs as facilitator need to be truly customer-centric, that is, go beyond convenience and user experience and not missell any product or services just for a fee. Further, loss to customer can also come from lack of sophistication or inexperience of customers themselves. Therefore, the product or service design itself should cover for each of these aspects, such as product suitability. Even the simple aspect of using user interface being designed poorly may hamper customer comprehension. At times, the design itself may be intended to exploit behavior biases by concealing of or under-emphasizing the risk and cost. These things must be avoided by fintechs with true focus on customer interest. Now, on the second aspect, the governance, which is the glue. Good governance system and practices are essential for the sustainable growth of a fintech and for them to be customer-centric. The value of accountability, fairness, transparency, and independence in the processes and people within the organization cannot be overemphasized. The role of board in putting in place a good governance framework and value system is critical, as in such matters, it is the tone from the top what is most important. While concluding, I'd like to say that fintech innovation and regulation go hand in hand. While as a regulation, we are tirelessly and incrementally working towards a regulatory framework that provides a supportive environment for fintechs and at the same time maintain financial stability and protect the customer. I urge fintechs to adhere to the principle of customer centricity and to adopt and follow good governance standard in its true spirit voluntarily. Only through these collective efforts will achieve the true balance and contribute meaningful to the entire ecosystem of the fintechs. I wish this conclave a great success. Thank you.
I would not also like to invite Moneycontrol's Dinesh Unnikrishnan to moderate a discussion with Mr. Choudhary.
Good evening, everyone. Sir, it's a pleasure to have you here. Most of us know Mr. Choudhary is one of the key persons at the central bank who's been driving the process to regulate fintech industry. He is also a veteran who has worked across currency, operations, supervision, etc. over 30 years. Thank you for your time here. I just want to pick up some points. I think it's a little over a year since the RBI set up the new fintech department. It was in January 2022. And that's the time when you also took charge as the executive director. So how has been the experience? What's the most challenging part of last year?
Thank you, Dinesh. As I was mentioning about the multiple initiatives taken by regulator, means RBI, to achieve the balance between the innovations and the stability. And one of the, a few of the items what I highlighted is the creating the hackathon series and RBI Innovation Hub. But what I didn't mention, that a department, especially specific to the fintech sector, that was created on 4th of January of 2022, with the specific intention by our governor to foster the innovation while ensuring that stability is not compromised. I must share with you, it's 1 year, 2 months of childhood, actually what we have spent. And it's a wonderful experience because multiple things actually we are handling. One is entire fintech ecosystem, how it is growing exponentially, not in India, globally, and how to handle this and how to develop a framework to ensure that they continue to foster innovation without compromising the stability. Second, you all must have seen and heard about the CBDC. So that CBDC we have conceptualized, ideated, and now gone for the pilot also, and with the in a closed user group with the support of few banks, including the bank IDFC, Vedya is sitting here, and we also run this regulatory sandbox hackathon, and creating some sort of a framework actually for future ecosystem of the fintech, so that they can continue to foster innovation without diluting the stability part.
So there is a view in the fintech community as we interact with most of the stakeholders that the RBI has been, reluctant in terms of giving a, freedom to fintechs to grow. On one hand, you say that the fintechs need to innovate, but there is a view that as the regulator, you have been slightly, reluctant. You clearly don't want them to get into lending. You don't want fintechs to grow big. So how does the RBI position fintechs? What do you want them to be?
When we talk about a fintech or any tech, this idea is this: to use the tech to improve the efficiency of the financial or that system. When we talk about RegTech, SupTech, FinTech, it's basically tech we are using to improve the efficiency. In case of Fin, is a financial system and services. That particular part, improving the efficiency part, is perfectly fine and welcome. But so if it compromises in any way the stability part, and if compromises on any of the policy objective, I'll underline here again, the policy objective of financial integrity, policy objective of data privacy, policy objective of customer and business conduct, policy objective of cyber security. If any of these objectives are compromised, then regulators have to chip in. At this point of time, fintechs are not regulated.
Correct.
Right.
So
we are working on the framework how to handle that. We are not talking about regulation. We are talking about a framework which can handle this particular entire ecosystem.
So when will we see a clear framework in terms of regulation? Will we see that in the first half of this year, or?
No, we are working, committee has informed they are going to give the report. Based on that, RBI will take a view and decide how we have to take it forward.
So is it fair to expect that we will have a clear framework for fintech regulation this year? Is that a fair expectation?
Again, I'll underline that it's not a regulation. We are talking about the framework which will basically give the direction or vision how to handle this ecosystem so that it does not compromise the stability.
Yeah. So one related question is about the digital lending apps. Recently, RBI had collated a list and sent to the government. Subsequently, many apps were banned. So I understand you are in the process of collating another list. Is that correct? Yeah?
No comment on that, because if anything is suggested by the committee and if it is accepted by RBI, and then if any legislative changes are required, then possibly we can approach for the changes. But at this point in time, nothing is in store.
But how do you see? We understand about the banning of illegal apps. We already have the precedent for that. The RBI is working with the government. But does the Reserve Bank of India has the bandwidth to regulate the illegal lending apps? Because there are so many across, most of them working from outside. How do you regulate?
This is something very, very serious issue. At this point of time, when we are talking about the legal apps or illegal apps, whether any one of them are regulated, if they are not part of the regulated entity, that is the big question. Because if apps created by banks, if apps created by NBFC, that can come under Reserve Bank of India. If apps are not created by them, is something independent entity which are not regulated, they are not regulated. And in any case, none of those non-regulated entities are supposed to do the lendings, etc. And more than 1,100 apps, I believe, more than 80 stores, they are at this point of time available. Many of them possibly might not be part of the NBFC or banks apps ecosystem. That enforcement is required, and if required to be banned, they need to be banned if they are compromising any of the policy objective what I mentioned earlier.
See, in October last year, the Reserve Bank had a discussion paper which highlighted something which you touched upon in your remarks earlier about the threats posed by the big techs in the payment system, once they become the front end. We have the MNCs coming in a big way, garnering a big market share and dominating the payment system. So I understand the Reserve Bank of India doesn't really favor one party to dominate a larger share, but what can you do about it in terms of big techs dominating the payments?
I think this question, similar question was asked from the minister also, and he had responded. But as a regulator, I'll just touch upon this.
Yeah.
Obviously, as I mentioned, that use of technology by any big tech industry entity, if they are bringing in the financial system and they are bringing efficiency, obviously they are welcome, actually. That is a very welcome step. But the risk posed by the fintech startups and risk posed by the big techs are two different things. Risk posed by the big techs, if you look at, is relating to the concentration, is relating to ability to scale up significantly and bringing the things more systemic, ability for dominance, predatory pricing, all those things are possible through big tech because of their business models. And therefore, globally, it's not India, basically everybody is grappling with how to manage those risks without curbing the innovation and without restricting their access. We are also trying to have some balance. You are aware that we have outsourcing guidelines for the payment system and settlement system, as well as we have the guidelines for payment aggregator and payment gateway. Also, we have draft guidelines we have come out actually on the outsourcing for the information technology and information technology service providers. So all those things basically will be helpful in that direction.
All right. The CBDC pilot is currently on, which is something, which is seen as the next big revolution in terms of the way we handle money. Of late, you have mentioned about, first of all, I want to know that what is the learning of the Reserve Bank of India from the pilot so far? There are concerns about anonymity of the transactions. There are concerns about frauds, fraudulent transactions happening when you deal in e-rupee. So what is the learning so far from the pilot, CBDC pilot?
I'll just give you some background. 2 minutes I will take.
Yeah.
The pilot of the wholesale segment, because the CBDC we have started pilot on wholesale and retail segment. The wholesale segment we started on 1st of November of 2022 and retail on 1st of December of 2022. Use cases were different. For wholesale segment, it was a secondary market government transaction settled in the CBDC, and for the retail, it was a P2P and P2M. Apart from some initial teething troubles, actually, the pilots are going very, very smoothly. The many paper and many news channels, actually, we saw that the pilot is not successful because it is not scaling up. But I must mention it, target is not to scale up at this point of time. It is a pilot. And it is to be a retail part, we are looking at the closed user group. At this point of time, it is around 90,000 customers and around 9,000 merchants. Basically, they are part of the closed user groups. We are targeting to scale up to 500,000 by June or July of this year. So that is the overall position of this. We are going to test multiple tech architecture. We are going to test multiple design features. We are going to test multiple use cases, including the offline programmability, cross-border, etc., and etc. And we are not in a hurry to implement it. Once we are very comfortable and confident about all aspects, including the cybersecurity and tech architecture, then only we are going to roll out at the population level.
Mr. Choudhary, in one related question, recently you said you want more private sector and fintech participation in CBDC. So could you throw some light on what is the thinking right now?
Because I mentioned about that, what is the motivation to bring the CBDC here? We have one of the best payment system actually in the world. And why we want to have the CBDC. CBDC is a currency. It is not a payment system. If you want to compare it, you compare it with the physical currency, and this has multiple advantages because it has characteristics of all physical currency features apart from convenience of being digital, right? 24/7 you can use it. Additionally, multiple use cases I talked about, cross-border, we talked about offline, we talked about programmability. Possibly, we are also looking at this through wholesale, the settlement efficiency, etc. But once the private sector starts finding use cases, more use cases for CBDC, that will be something where the flip will come and accordingly it will take the escape velocity and will be basically can be launched at the population level. You know even our UPI also. It has taken the flip actually during the COVID, and now actually is the way it is going, it's well appreciated. And this is a digital payment week, what we are celebrating actually entire week actually for this. So we are expecting that possibly next few years, CBDC will continue to be here. It will test it for all use cases, and all private sectors are welcome to support and provide the use cases, and accordingly we'll work on that.
What is the central bank's thinking in terms of FLDG at this point, the first loss default guarantee? You know, the industry seems to be pitching for this as a way to raise funds, more partnerships and innovation. But clearly, RBI doesn't want the fintechs to take part of the default. They are not favoring the FLDG. Is there a rethinking on the risks and rewards on FLDG?
Difficult question. FLDG, it is what? It is a credit enhancement, right? And credit enhancement we have allowed for all securitization transactions. But credit enhancement is not allowed actually on the direct assignments, right? And this is a direct assignment, basically what we are talking about. And here basically we have compared it and actually found at par with the synthetic securitization, and accordingly we told it is not allowed, right? That is the way possibly we look at it. Idea is this, that who is doing the underwriting under the FLDG? If third party under FLDG is there, who is underwriting? It's not bank and NBFC. Banks and NBFCs are depending on the, say Amazon is there, they are giving some scores, Fintech is in between, they are giving some scores, and based on that basically ultimately banks and NBFCs are lending on it. Right. So it's a complete opaque system and non-transparent system, and they are non-regulated. They are not regulated by any one of us. So these are the concerns, and if it is scaled up, then system-wide risk actually if it is going to pose, that is something which we all are concerned about. So therefore, it's very clear if our regulated entity is involved, it is securitization, credit enhancement is possible. If it is not regulated entity, if it is not securitization, credit enhancement is, at this point of time, we consider it is opaque, non-transparent, and avoidable.
Thank you. On crypto, I can't remember an issue, at least in the last 10, 15 years, where the central bank has openly come out calling for a ban of something. So RBI clearly, including the governor and the deputy governor, has called for the ban of crypto assets in India. But till now, we don't have any clarity in terms of any national regulation for whatever reasons. Is RBI a bit disappointed because of the lack of clarity in terms of national law for crypto?
No, I think there is a lot of clarity from RBI side. Our governor has spoken on cryptos. Our deputy governor has spoken on cryptos. We have tried to do a lot of research on the private currency, exactly what it is. We fail to understand what it is. I'm sorry to if anybody differs from my point of view. We don't understand whether it's currency, it is not meeting any of the characteristics of currency. We are looking at whether it is commodity, it is not fitting into any of the characteristics of commodity. We are looking at financial asset, no, it is not asset because it is no one's liabilities. So ultimately what it is, right, and how to regulate. So 1 year before or 1.5 years before, globally, nobody was listening to us. But now entire globe has gravitated towards India's views that there is risk, there are concerns on the private currency, and we need to handle it. G20 presidency under India presidency, this is also one of the major discussion point, and it was clearly articulated, if you must have heard, that it needs to be discussed among all the major countries, and accordingly, if required, it needs to be regulated, and if possible, if regulation is not possible, we also can think of banning it. So these are the issues basically we are concerned about, and so far, I think our governor articulated 1.5 years back, and I have not found a single article where they could contradict any single point of any one of the points actually pointed out by our governor and deputy governor on that. So that is our point of view is very clear. As far as India's stand is concerned, that we cannot comment, right? That basically ultimately government of India has to take a view.
We are coming to the end of the conversation. I just have one more question. That's about what do you really do with the fake messages? Of late, there have been so many online frauds in banking transactions. We recently saw a report last week that almost 40 people of a single private bank were duped. They were given a fake link which asked for an OTP. So many people entered that, lost money. I know RBI has been cautioning it since 2015. There is nothing new in this instance, but of late it seems to be there is a rise in such instances. What is the thinking within the Reserve Bank of India? How to handle?
No, it definitely is a big concern, and it requires a lot of concerted effort from all stakeholders, as well as possibly lot of education on the part of customers. That is I find many times even very educated people also now caught actually in such type of frauds. So multiple fake identity, you say account manipulation, then spoofing, then phishing, and all those things are happening nowadays, and these are the areas of concerns. And RBI basically, if you say multiple initiatives have been taken actually, educating the people to be aware about this issues relating to the fraud and online frauds, etc. And we believe that with a lot of education and concerted effort by all stakeholders, we can tackle it. And obviously data privacy law, as Minister has mentioned, as when it comes, actually, possibly it will further help in this direction.
Thank you so much for your time for that, for those insightful comments. Thank you so much.